Good morning, everyone. Welcome to the Euro Trade with myself, Marcus Stalker D, aka Deeyana Angelo. I see. Okay. Yeah, there seemed to be a bit of confusion about the timings, and it does seem like the YouTube schedule has been set an hour early. Bruno is letting me know. Apologies for the confusion. It's obviously a little bit of an oversight on whoever was doing the stream schedules. There's always this like weirdness in March and April when the USA is changing the clocks, and then basically the UK runs late. And usually this stream should be happening at 3:30 a.m. Central Time, which is 9:30 a.m. UK time, whatever that might be, whether it's GMT or BST that we're in now. That obviously depends on the time of the year, but typically you can expect in March and November that we're going to have this weirdness, okay? But we are back in sync, so yeah, it was probably just an oversight, so let's not panic. I am here, nobody's... there's no fires to put out or anything else. Anyways, let's have a look at this copper trade. Now, if you're here for the first time, let me just introduce myself quickly. I've been trading for about 18 years, and about 13 years out of that, I've been in the prop trading industry. So well before the online prop firms came to kind of center stage. I specialize in some of the more unusual products. If you've been here for a hot minute, you'll know that I like to trade a variety of things. Now, I don't trade all of them at the same time, obviously. I trade whatever looks the best on the day. However, I am primarily a commodities trader, so I focus on things like crude oil, gasoline futures, copper, platinum, sometimes gold. But I will be honest, gold has been a bit of a tricky beast with like huge candles and ranges that are a little bit too far out of my comfort zone in this volatility. So I have been focusing mostly on natural gas and on copper and the occasional platinum trade. Now, what I've got here is more of an educational combine, basically to illustrate what it looks like to trade sustainably. So not trying to pass in 2 days, not, full ported for no reason whatsoever, but just basically to treat this account as if you are trading in your actual funded account. So, respecting the account, making sure you're not oversizing, that you're not overtrading, and if you do have those Muppet moments, to also make sure that that you're putting them down in your trading journals and actively trying to tackle each weakness one by one, not everything at the same time, right? Not like, oh yeah, let's just do, I have a problem with this, and that needs changing, and then you start changing all of it. So the whole point is to pinpoint one biggest problem that you have that is causing the most trouble for your P&L. Whether that's lack of consistency due to oversizing, so you're constantly going, oh, I'm going to trade a mini, now I'm going to trade 5 micros, oh, now I got scared, now I'm going down to 1 micros. That's a bad thing, okay? So you need to kind of stay pretty consistent. Now, this particular account didn't start off swimmingly. It was like, oh my god, she's smashing it. No, I had a couple of little tiny days base hits, so to speak, and then in the second week, as you can see, I how can I move this? Let me make myself a little bit smaller here, as if I'm not small enough, but yeah, just to kind of see the P&L here. So as you can see, a little bit of a, push and pull, but ultimately keeping control of that downside days. So not, making 300 in one day and then going, you know what, I'm just going to, size up now and let's lose $1,000. Because in the previous 2 days, obviously I was using micros and I still am on this account. So basically you're going, what is my average win here? Okay, let's say it's about, 250, 300 ballpark, right? So because of that, going over the $300 for your personal loss limit, once if your winning days look this way, is not the best thing, okay? You have to keep the down days at least equal to your winners, okay? And then obviously things kind of started picking up, and yeah, we still have base hits going on. We still have base hits. Now, what are we now? Thursday. Yesterday, I don't know what this was all about. I think this was. Oh yeah, no, of course. It was that long copper trade on 1 micro that I took while Jerome was on. Yeah, see, I'm like Drew Barrymore in 51st Dates. You asked me what happened yesterday with my trades. Like, I have photographic memory for everything else, but you asked me, oh, what is a trade? It takes me a minute because I don't over dramatize things. I don't go, oh yeah, that was an amazing trade. Because after 18 years, all I'm worried about is how I'm controlling my downside. Nothing else, right? Profits usually take care of themselves. I'm also somebody who likes to run more kind of swing type trades intraday, so I will not be typically scalping unless the day calls for it. So those are just kind of some pointers, how you can approach your account with more respect and with, more common sense, I suppose. We have a big day today, so we have, is it a CPI day or is it PPI? Yeah, so we have core CPI coming out at 1:30 p.m. UK time. That's a little bit of ways away. So, that's probably going to be fairly impactful on copper, but also on gold and equities. And I think everybody's going to be watching to see exactly what is happening with the inflation, right? Now, the tariffs have just been introduced, so that's likely not going to have any sort of an impact just yet. It's having an impact on the markets, but I don't think we've had enough time for that to seep into the actual, expectations of the inflation, the numbers and all of that. But we'll see what happens. It's going to be an interesting one for sure. So be careful going into that. I'm never really into like trading news, like keeping an open position once the news are happening, because obviously you can get stuck in positions, you can get a lot of slippage, and even simulated accounts, they try to give you a little bit of a realistic environment, but nothing really matches the live environment when you get stuck in a position and you suddenly start scratching your head as to what happened, start blaming the brokerage, all of that. But really, if you are trading into news very close to your position, or you're initiating positions right ahead of the release, that's not a good thing. Okay, so please try to be flat into CPI. There's always opportunities after the release, so I like to trade the aftermath, whatever, however you want to say it. My accent has been going a bit weird because I basically only talk to my Topstep colleagues, and obviously my brain sort of starts to mimic, or attempts to mimic people's accents for a very weird reason. All right, let's see. Is 45 trades in 3 days to pass a combine too many? Yeah, I would say so. There is no, especially in this environment. I mean, let's have a look at what happened to the equities yesterday. If you are on my Twitter or my YouTube, the Twitter post that I did on ES literally a couple of days ago, you will see why I look at like very, very large time frames. But basically, when you have just one move that keeps going, I've seen people trying to scalp this. I'm like, what are you, like, gonna go long here, gonna go short. It's a swing. Just stick with it. So I would say that 45 trades, unless you've had over 10,000 trades across like a year and you see that there's an edge there, I would say that, yeah, that is way too many. And why do I say that? Whenever I talk to other scalpers who use that as their core style, they all have a very systematic approach to it. It's not like, oh, let's just click buttons all day long. It's literally something that they do, that they've noticed. Maybe they come from a more market-making backgrounds, and that's a little bit of a different game. But all of those people typically have well over 10,000 trades for a sample size over a meaningful amount of time. So not like, 2 days, 1 week, 1 month. No, it's like a year's worth. Let's see if there's an edge. So if you don't have that and you're somebody who hasn't been trading for like donkey's years, as they like to say here, I would probably stick to finding a good trade location, diagnosing a chart properly. Diagnosing a chart, what does that mean? Where you look at where the highs are, where the lows are, and try to find a quality setup. If you're just sitting there and going, oh, it's moving. Oh, I suppose I have a level there. Click. Okay. That took 10 points. I mean, taking 10 points in markets that are moving on average now. So I'll tell you what the average on ES is. So you tell me whether it's hilarious to watch people scalp 10 points when the market is giving you like 1,000,000 points per day. To me, that's just like not taking advantage of the market structure. That's just my... But don't get me wrong, there are times when scalping is the appropriate thing, if you have a range-bound day. So let's see. The average ranges in ES have now climbed up to 873 points per RTH, so regular trading hours. And the ADR, which is like the full 24-hour measure over the last 10 days, is over 1,000 ticks. And then somebody goes, oh, I scalped 40 points in ES. What, do you want a medal? So you missed out on all of that. Like I would have expected you to take at least 250, maybe, 300. So, roughly about 10 to 20% of the swing move that's happened very, very obviously. Obviously, this was a little bit difficult. But for example, yesterday I took 300 ticks out of YM before all of this happened, right? And I kind of identified a range-bound day, but then it looks very similar to ES. And I prefer YM to ES and NQ because I feel that it moves a lot more like DAX. It's smoother, it's not as dramatic, and if I'm going to do equities, I'm usually trading them very, very late in the day, or if it's a range-bound day, I will kind of scalp a little bit. But I'm not a core equities trader, right? So is 45 trades too much? Yes. Because I don't think that people who are doing 45 trades, 50 trades, 300 trades per day, I don't think they quite diagnose the chart properly. And then they look at everything as a scalping opportunity. It's not, to me, the right way, especially if you're a more newer trader. Now, I would just say this. If you're somebody who's been scalping for, 5, 10, 15, 20 years, and that's working for you, keep doing that. Obviously, who am I to tell you that that's not the right way? That's obviously your way. But I'm just more talking to more novice traders who see these more experienced guys and girls that have been doing this for a very, very long time. And then they're like, oh, I'm just going to emulate that. And then they get themselves into so much trouble because the risk systems that involve scalping, they usually rely on very high accuracy to work over time. Now, time is the only judge of a system. I keep saying that. Time is your only judge. I don't care that you pass the combine in 2 days. We've done the Batman meme here. But, so I'm not going to drag that out again. But, somebody's scalping so much and yet you have a swing opportunity there. Why wouldn't you flip to maximize the profits while minimizing your execution costs? That's where it's at, okay? Maximizing your profit while minimizing the execution cost. And also, some of the systems that call for lower accuracy but higher risk reward, they tend to be naturally stable over time. Naturally stable. And that's not to say that someone who loses control, again, even if it's a swing trader, like they're trying to do swings, and then one day they do one trade, but then the next day they lose the plot and start doing 30, that's also inconsistent. So on both sides, swing traders and potential scalpers, if you're a more novice trader, both can make mistakes. But if you're a newer trader, the swing side of things, where you're just being really selective and you are aiming for a slightly larger risk reward. When I say that, I don't mean 1,000,000 R multiples. I mean like 2R, 3R, 1.5 R. Anything over that sort of 1.3 R hump will make your system more stable, even if your accuracy bleeds. And why do I say that? Well, I've been watching the VIP traders trade. A lot of them are trying to be scalpers. But here's the thing. Their stats don't really match the system design. So their risk of ruin is always sky high. We have people who are doing 50, 100 trades per day, and their accuracy is in the low 30s. but their risk reward is negative by almost full 2R, sometimes even by, like, this is one person that's negative 11R. That's never going to work. Like, I'm sorry to burst your bubble here, but what are you doing, you know? Nata Animate said, hi Deeyana, what happened? The after party was good ASF. No, it's just somewhat, like I said, someone put the times. I wasn't even aware of this because obviously I'm not the one creating the streams, right? We have a team who does that, and somebody decided to put it in at obviously 2:30 a.m. instead of 3:30, but yeah. Constantine says, how do I find DAX on Topstep? You cannot, because DAX is not, Eurex products are not yet available. I'm trying to get them in there. Now, if you are interested in, you know, hopefully begging them to get there, please post, upvote this post, and then it's going to be hopefully on their radar. I know it's on their radar already. Every time I talk to the team, they're like, yeah, we know it's one of the more requested products. Yeah, we know. It's like, can we get it done, guys? But, you know, again, I'm just an on-air personality. You know, I don't have any sort of power in what they're going to bring to the front. They've been working on that, the wrist tools. Now we have the symbol block. If you didn't know, let me just go over that. So now you can block the symbols. You can block the symbols here. If you don't want full NQ, you can just put it like that and add block. And then if you lock out your wrist settings for the day, that means that you will never be in a situation where you accidentally put in 3 NQs instead of 3 MNQs. So very, very useful. I really like this feature. I know that so many people have got themselves into trouble, myself included. Sometimes you're a bit sleepy. Sometimes, you know, you're trying to get into a trade and you don't notice that you're clicking on the wrong dome. That's okay. But here we go. Topstep again is working on some systems that are incredibly, incredibly useful for us. I just saw Nata saying, how do I change the price on my position to points? All right, so let me show you that. Charts and data. Chart value display type. There it is. And then usually it's set to dollars, right? So change that to ticks or points or percent, whatever floats your boat. For me, it's ticks because my brain works in ticks. And once you set that, now here there's nothing to save, obviously, because I already have it in ticks. But once you save that and you go back to your chart, then your P&L on the chart here is going to be displayed in points. Now, if you want to hide it on the dome as well so you don't see it, I don't really mind this too much because I'm not, for some reason, I don't obsess over numbers on the dome. What does bother me is when I'm seeing dollar amounts up here. So when I am trading myself, I actually hide all of that and I completely focus on the process. But, you know, if you want to hide the dome, you can also go hide P&L. Here we go, hide P&L. Then you save that and it's going to remove it. Now, I would like them to implement the ticks in as an option as well. And another point that I've noticed is that it doesn't hide the this P&L. So do they have an option for that? I don't think so. So again, I would like everything to be hidden so that there's no reference to any dollar amounts or anything, so that you're literally just looking at every single trade in the same way, whether you're trading 1 micro or 100 lots of minis, okay? All right, let's carry on. Can you please explain the enable trailing feature? Okay, enable trailing feature. Now I don't use the trading feature because I'm actually pretty good at walking away at the high mark of the day. But I do know that a lot of people struggle with it. Now, the first step, for me, wouldn't be to default straight to the trailing drawdown. I would like to see people maybe limit the trades per day first, right? So whatever that is, you go through your history and you go, well, how many trades do I normally do on my good days? So let's see, 4 trades. 4 trades. Here's a day where I don't like that. I traded a lot, and yes, it's up because it was a more range bound day, but that wouldn't be a typical thing for me. However, I know that I was scaling in and out there as well. So I would say 6 trades, right? So 6 trades for me. If you're scaling in and out, that will get counted by the platform as well. And it's going to, you're going to need to adjust the risk to reflect that, obviously, right? What the hell's going on here? Really? I just set like a ludicrous risk amount on the profit target so that I can change it. But the trailing, you effectively enable trailing. And the first thing you need is to say whether it's going to be unrealized gains or realized. Now, for me personally, if I was going to advise someone to do this, I would set this particular profit feature to unrealized gains, because we can so easily size up, and then before you know it, that next trade wipes out everything. So once you put unrealized gains, there should be a personal profit target here. So basically, I think you would need to... Is there any way? So I'm trying to see if there is a way that they set the actual point. Like, I thought they would have set that. Did I not see that? Am I just imagining things here? So basically, unrealized gains is that once you get up to a certain point, if you come off, then it's going to cut you out at that point. Now let me just see what happens when I go like this. Okay, am I totally... no, I see. Yeah, on the dome. On the dome. Thank you, Bruno. On the dome, really? It's a bit of a weird... I've got to say that's a weird thing. So, dome? So, again, you can see I don't use the trailing drawdown feature, so I have no idea. I thought they would have had it in the risk settings. So where on the dome, Bruno? Oh, you have to also go into privacy stream mode. That's a bit weird as well. Okay. Privacy stream. Balance or account? We're learning together, guys. We're learning together. But yeah, you can see I don't really use this. Okay, privacy stream. I did that. I don't see it. What an odd choice. I mean, it's a good feature, but why isn't it in the risk settings? Like, I don't get it. Oh, they're hiding, not trailing. Right. Okay. Sorry. Need more coffee. Yes. Get with it, D. Get with it. Wake up. Come on. Yeah. So, somewhere you should be able to define, I don't know where, I'll be honest. I have no idea where they've put it. But you should be able to define the actual profit target. So yeah, I don't know where it is. Is it just after each unrealized, like, is it after each? Does it use this as a potential? Okay, so I'm sure that our coach Robert, who knows a lot, I mean a ton more than I do here, you should probably go and look for that. They always do these like 5-minute tutorials, and Robert does all of them. So let's see, multiple charts, trading release, account nicknames. Did they create one for the new things? Trailing stop? No. Personal DLL. I don't know. Maybe they'll be adding it more. I don't see it here, personally. So yeah. Let me say this. I have no idea how to set the point. Because, with the trailing losses, you really need to set a point where it's going to start trailing you, right? Before then, it's like, it's a little bit difficult. Because what if you do like a scratch trade? Like, is it going to take you out at like 30% of a scratch trade? That's not ideal. So yeah, might have to reach out to the team to actually see whether we can maybe change this, because this is really unintuitive. It's not very clear what is going on. So in the past, I have given the team a lot of feedback on Topstep and stuff. So I'm going to see whether we can maybe improve this. It's a great feature, awesome feature, but honestly, me looking at it, somebody who doesn't use it, I'm not clear on how to set the point where it starts trailing you. Because, you want to give yourself a few swings at the bat. You want to maybe try a couple of times on a setup, and then whatever profit you make, let's say that you're aiming to make, I don't know, grand a day. But once you get to about 800, you want to start trailing it. All right, so here is the help page. Let's go. Let's have a look. Let's learn together, guys. Let's see. So how do the trailing profits? Okay. Unrealized trailing example. Okay. Yes. Select risk settings. Set the dollar amount of your loss limit. Oh, I see. Okay. So it uses the personal daily loss limit to trail it from the high mark. I would want those two separate. That's not the same thing. I don't want to risk, if you have a really big day or something and you outperform, like, no, that's not the same measure. So yeah, I'm going to see if I can reach out to someone. Because this is not, like, personal daily loss limit and a trading loss limit to me. Like, for example, I want to use, let's say, 10 dividing by maximum available balance by 10, for example, for my personal daily loss limit, but I wanted to trail me 30% from about, let's say, 300, so I don't want to lose more when I get to my target of, let's say, 300. If I start doing stupid things, I want to be cut off. That is not the same measure. So yeah, I'm sure they will improve it. It's new. So obviously keep giving them feedback as well, but I'm going to give them feedback too, so that we can continue to improve Topstep as a platform. But yeah, I'm going to switch that off for now and save, and then go back to maybe explain this trade. I'm not IT support. I mean, I have my own software firm, but obviously I'm not involved with the Topstep project, from a software side. I just use it as an end user so I can give some constructive criticism, but generally, I don't know how they're coding it. I haven't been privy to that. But yeah, as an end user, I can provide some criticism, and I think those two should be different, okay? They should be different. All right, so let's have a look at what I'm doing with this copper trade. Weekly chart. Massive time frame. We kind of went berserk yesterday, right? Tariff news, whatever. Over like 1,000 ticks up. Now, I did post something on Twitter. So let me just find that. 2 days ago. So this is what I posted. Monthly chart of ES. Why am I picking this line? Because that was the perceivable top, very well defined, back in like January 2021, right? January 2021, I believe it was. So this chart plots the monthly chart starting at GMT midnight. I don't know why, but the GMT midnight tends to be a little more defined, whether it's because it starts with Tokyo and then you go to 4 hours and then 8 hours and then it starts to London, and then the regular trading hours kick in. But for some reason, whenever I look at other platforms that have starting candles on like weird times, like 1 a.m. or 11 or like just the weird times, somehow I feel like they're mixing and matching the out of hour session with the main sessions and, Asia, London, RTH. And I always feel like that introduces a lot of variability into the data, and it kind of pollutes the data, right? I really don't like it. So I use this platform to show me kind of those clean highs and lows that are not mixing and matching sessions and out of hours. So yeah, I saw this. So on my Twitter, I posted, interesting, with like big eyes, right? So we can see it. Like if you click underneath the video, it's going to take you there because they very kindly posted my socials. I've got a post-it note here that says outro, because the first day when we got the new outro, I completely forgot about it. So I'm just trying to like poke myself in the eye with it. Oh, where is it? Okay. Here it is. So as you can see, this was 8th of April, 10:45 p.m. my time. That's what, about 6? I don't know. So it was pretty late, and I saw that and I was like, interesting. We had a bit of a bounce from there. And the reason why I say that is because we went into a bit of an MOC rally. So I'm like, right, okay, that's interesting. And then, I tracked it. I was like, I want to see what happens. And then, if I go to my profile, I said, still holding 18 hours later. Let's see if it holds into the end of the week, right? But I was stalking it as a potential, like if I see it intraday starting to react and, get those buyers stepping in. And all they need, like, is it a technical? Is it news driven? It's both, right? It's a technical level of interest. And they were looking for any excuse to buy things in equities. And then we have a pop of over 2,500 ticks in a single day. This is a monthly chart, but if we look at the daily, if we drop down to daily, like it literally touched that level and it just went. And it took a few days to get going, right? We hit it, then we sort of stopped, then we made a consolidation, and once they had that big news, it just pushed. So this is why it's important to diagnose a chart. That is what I mean by diagnosing a chart. I don't want anybody going, oh, I don't know what's going on in the weekly. Why would I look at the weekly? Because I'm an intraday trader and I look at 15 seconds. What do you think I'm going to say to that? Doesn't matter what time frame you're looking at. You must be aware. You must be aware of the larger time frame participants. Because if you're not, you're going to be flabbergasted when that happens. You're like, oh, well, what happened? Huh? It's bonkers. It's like, to me, it wasn't that surprising because I know that fake tweet came in and everything went crazy, right? So I was expecting that we're going to go crazy at the very next great news. We were talking about it on TopstepTV as well. So those people who are like staring dumbfounded, how did this happen? I've never seen this. I've seen this. This is my 4th Black Swan event. Crisis potential. And, this is what happens at periods of time of high volatility. It's not unusual. Everyone was like, oh my God, crude oil went to 700. During COVID, we had a day when crude oil fell 2,000 ticks. 2,000 ticks. So similar move that you've seen in equities. And then on average, everybody's so conditioned that crude oil is quiet. Crude oil is quiet. Crude oil is not bloody quiet. I've been trading it for 12 years, right? For all the 11 years before we had the election year, it wasn't quiet at all. It was actually very, very volatile. You used to have like 300, 350, 400 ticks on average, not like, oh yeah, one big day. And then if you would have one big day, that would go to 500 and 600 ticks, right? And suddenly we get to whatever it was, February, March 2023, and it goes into a $1 range. So that's a difficult thing for traders. And this is why I personally like to have other options, just in case that starts happening again. So everything is slave to equities at the moment. So whatever equities are doing, to a degree, it's going to have a knock-on effect on everything else. So even if you're not an equity trader, which I know those are not very, very frequent, because everybody's an equity trader these days, it seems, you still have to have an awareness of a general sort of macro picture. I'm not saying, become a hedge fund manager where you're doing portfolio theory and doing like these, Zen trades that last for months on end. I'm not saying that, but just have a basic understanding of correlations. And when those correlations start to break, you can actually start to see things in a slightly different way. You're like, oh, hold up a minute. I think that like gold and equities are now going in the same direction. What's going on? Bonds and equities are now going, like, this is not good, right? And once you start to see the markets that way, and I know it will take time. Everything that's worth in life takes time, okay? I know everybody wants everything right now, yesterday. We all want to be downloading information and then being the wizards in the next day. That's not how it works. Skill development takes time. And if you approach it as a challenge, it's not going to be a laborious process, right? It's going to be, okay, let's learn. It's exciting. Like right now, I want to learn Remix, which is the same software that main broadcast uses, because I'm so annoyed with that other little platform that shall not be named, and I want a better way to control what's coming in and what's coming out, and at the moment that's annoying me, so I want to learn. I am pretty good with video stuff, but there comes a point where you just get so annoyed with something, like I got annoyed with crude oil last year and decided that it's not going to be it. But now we're back. It seems like the volatility has kicked up. And, people are like, oh my God, this crude oil, 700 ticks, what? It's like, yeah, that's crude oil for you. Just because you got lulled into thinking that it's some kind of a granny product that doesn't move, that's like 1 year out of all of the years that crude oil was trading. So it seems to be back. Whether it holds, I know the VIX is a little bit high. OVX is a bit high there, but, All right, so what am I looking for here? Let's go back to full copper. And then, so again, large move that echoed the equities move in copper. But now we had a consolidation during Asia that wasn't able to break through the previous day's high. So usually when you have days that go completely bonkers like this one, you will at the very least have some sort of a retracement before the next decision point. Now, looking at the levels, we have the value areas that are pretty far down. I have seen copper do a complete turnaround the very next day after an outlier day. So I'm kind of on the fence whether I should be using this bullish engulfing from an outlier day as a potential reversal pattern, because we're pretty high up already. But if I decide to keep this, I will probably be looking at least a rotation to the value high. But it all really depends what they do in this area that we've just come into now. So this is what, 433 all the way down to 430, right? That would be kind of like loose target 1, okay? If we start to bounce from there, I will take the entire position off. But right now, nice little supply attempt creation. Don't know when the 4-hour chart is going to end, but it's looking very promising at the moment. On the intraday time frame, I put this red rectangle to delineate the initial balance for the London session, which always starts at the same time, regardless of the product that you're trading. And we had a bit of an extension down. There is a danger that we whip back up to the VWAP area and then continue to go down, in which case my stop where I'm risking $220, 212 with saving 7. That would be not an ideal situation. So, right now they are slowing the auction down, but I do have this put area that is still an eyesore and should be the logical area where we might see some more buyers. Now, if that doesn't happen, that's fine. The risk is controlled. And at this point, I probably don't even need to risk this much. This is where I will move my stop. Why? Because I don't want it going back into the initial balance. And even with the reduction of stop loss by 20 ticks, why am I using such large stops when I normally trade copper on 35? Because I can't trade copper on 35 when the bloody ATR on one candle is like 70 points, right? This is where, you have to make sure that your strategy matches and your stop loss sizes matches the volatility of the product you're trading. 35 ticks last year, or even a month ago, even like 2 weeks ago on copper. That's not the same thing as 35 ticks now, because you enter with a 35 tick stop, and it just goes whoosh. And you're like, huh. It's like somebody giving you a slap in the face. And you're like, that didn't survive for 3 seconds. Like, what? If that's happening to you, you need to immediately size down and review your stop loss placements, because you need to have your trade that survives at least for whole 10 seconds before that happens. If it's not surviving, ideally 2 to 3 minutes, right? To basically give yourself time to decide what to do with it. If your positions are not surviving past that, it's not an appropriate stop size for this volatility. Okay. Use a volatility scale stops. Use ATR, use ADR, use ASR, use anything that will help you to figure out systematically and more methodically how to place your stops. Okay. Because, sticking to, I've seen some people like, well, I'm risking 20 to get 30 ticks, or, 20 points to get 30 points. And I'm like, you're not going to get anywhere with that. And then they come back and they go, yeah, I got whipped out in like 3 seconds. I couldn't even. And then the mental triggers start happening, Smacks you in the face once, and you're like, huh, okay, let me go in again. And then it smacks you on the face again. And you go in, what? This is not what it was like. And then suddenly your fight or flight response goes, and you lose your shit. And that's when you blow up, right? So we want to avoid those moments. We want to be zen. We had Jerome here yesterday, and we're going to keep having them every Wednesday. We were talking about FOMO. We were talking about, how to control yourself under pressure. And, it's not easy. It's not easy, but once you understand what's happening to you, you can step away, do the introspective part. And, I was talking to Hoop, and as it turns out, whilst we were talking, Hogue gave Hoop a call. So it was like this awkward 3-way conversation. And Hogue actually said something back in the day that Hoop reminded me. He said, when the markets get fast, I need to be slow. When the markets get fast, I need to be slow. Yeah. Butchered that a little bit. But, give me a break. It's the morning. It's really true. So when things start flying around, the last thing that you want to do is like, oh, it's moving. I must get in. I'm always like, no, you don't have to get in. You have to breathe. That's step 1. Breathe. It's like, what happened? And then, every time I'm on with like Jay or, Robert, and things start flying, we're not going, let's trade this. We're going, this smells newsy. Anyone got anything? None of us are going, let's enter the trade. No, we're all just like, let's find a cause first. So, diagnose the patient, the chart, and then we can maybe look to see if there's an opportunity there. So we're not jumping into like massive moves and stuff. All of us are like risk first. How do you limit risk here? Can we limit risk? No, we need to wait. And that's something that you will only see experienced traders do. When you see some others who are still under in the whole prison of the dopamine rush versus the dopamine crash, what you're going to see is like, yeah, let's effing go. And then they lose and they're like, guys, it all went wrong. I'm so depressed. It's like, you don't want to be a, manic depressive trader. That's like, this is not the job for you, or get on medication or something. But, those are it's not the outcome that you want to have. And I know that it's sensationalist. I know it's great TV, but you cannot strive to be that way. You need to be calm, cool, collected, centered. And we're going to have Brett Steenbarger here today for an Ask Me Anything session. So, definitely check that out. So Constantine, when I say swing trade, I mean in intraday terms, meaning not entering positions a million times a day, but finding a swing intraday when there's an opportunity and then riding that big chunk of the move in a one trade situation. Okay, I'm not talking about swing trading as in like holding multiple positions. Okay, there's intraday swings are very juicy, as you can see. They do happen. Like, this is a swing. This is a 30-minute chart. This is a move that lasted for 1, 2, 3, 4. So it lasted like 3 hours. It's an intraday swing. Okay, I used to call them semi-swings because you're not holding positions over. And then, to avoid confusion, I suppose I was coming up with a name for it. So there's no swing trading on Topstep. Swing trading, the way I'm talking about it, is from an intraday perspective because most intraday traders are grasshoppers, right? They're like, let's do more trades. Let's do 15, 20, 25, 20, 30, 35, 190, 200. We had that one guy that was like trading, like, was it like 2,000 round turns in one day? And then Jack was like, the guy would have, if this was on a live account, he would have single-handedly accounted for, I think it was like 30% of the entire micro contract of volume that day. So it's like, you want a market maker? Yeah, there's one. I see some new people who are not really that clear. Eric 1M says, regarding correlations, how do you determine which market is moving the other? Typically, that will be down to which one is kind of going faster and which one looks either stronger or weaker. So typically, that means that the others are getting pulled along. Right now, we are in a bit of an unprecedented situation of a semi-black swan event where we are having everything going nearly the same way, right? Everything's either crashing or everybody's buying. There's no like in between. Even bonds have kind of broken down the correlation. That's a worrying sign, right? Now we'll see what happens after CPI and PPI, how we close into this week. Maybe recession is avoided, maybe, but we still don't know that, right? So we'll see how things play out. So patience, if you find a good trade based on your technicals, you should jump on it. But how are we going to play this today? Again, I don't have a crystal ball. I see what you see. Maybe with a slightly more critical eye, granted. But, all right, I'm going to bail out of this trade because this is very slow. I think they're waiting for PPI. Like, we had all of this happening. But what I like to see is initiation of the move from the point of a break of initial balance. We're not getting that. So not liking that. So the danger that this is going to go all the way up and whip to VWAP, this is Globex VWAP on my charts, is very, very high, okay, before it does anything else. And because of the volatility and stuff, I want to be fairly careful with my trade locations. We do also have this swing from Asia high. So this is the previous day, and then we have the swing pop and a reaction. So I was looking for more downside, but I'm very aware that on the daily chart, so here's where matching multiple time frames has to come in. Look at where this is coming from. This is that point of a market shift from the old supply and demand, and we're not even getting to the put area, put support from the options. That can be a sign of strength, okay? That means that this is the only retracement we're going to get, and it's going to like shoot back up. It's a little unusual after a big day to not have a deeper pullback, but this is already what, 30-40% pullback? Let's measure that. Let's measure that. Rather than doing stupid trades, let's prepare ourselves for the main event a little bit later on. Yeah, so that's nearly 50% actually. Yeah. In fact, I would argue that it is 50%. So yeah, so that increases the danger that we're actually going to go into a bounce higher. So I'm very well aware of that. I was looking for a deeper pullback. I will be honest. I was. Didn't get it. That's okay. That's okay. Ended up with, $15. What does JD say? $15 and Cicero's $15, right? So what can I buy for $15? Well, nothing, because it's sim money, this, but yeah. If once you get to the real money, this is micros, and you transfer that over to the minis. This is like $150, so not to be sniffed at. But we have to cut our teeth on the safe environment, making sure there's proof of concept, making sure that your process has longevity rather than I passed the combine in 2 days. Like, please don't pass combines in 2 days. It's so bad. Like, maybe if you're an advanced trader, do what you like, man. But for everybody else, I just see so many car crashes in the VIP. Like, I there was one trader that I said to be careful, don't put a big hole. They lost an XFA just yesterday after 1 day. So, give me a gun. That's what I want to do as a coach when people do things like that, right? So don't do that. It hurts me. It hurts me. It hurts me. All right. So yeah, now we're gonna wait. We're gonna wait for more data, more information, and whether CPI can give us a little bit more juice. All right. What am I doing here? I'm going back to YouTube chat. Okay. Yeah. So Bruno says, what can you do with the $15 of sim money? You can have a sim coffee and a sim croissant. Yeah. Thank you, Bruno. Very, very thoughtful. Trading Nichols says, yes, I've slowed it down and found longer held positions after a lot of listening to coaches and other traders in Discord, some of which were very good at seeing when 3 or 4 hour candles reverse. For example, watching for if a 3 or 4 hour candle is going to go back into the last candle or extend. Learning to recognize that was very helpful. Yeah, so you raise your skill level. And guess what? You are getting results, right? That's what we want. And you say, 3rd day in a row of nearly $400 win. Nice overnight short. So well done, Trading Nichols. That's exactly what we're talking about. Raise your skill level, raise your knowledge, raise your experience, profits will follow. Yeah? Control your downside. That's all we're saying. That's all everybody is saying. But no, people know better. They're like, I'm going in with 3. Like somebody the other day, I'm not going to mention any names, but somebody was going, oh yeah, I traded on my practice account and I was low lots. And then they said, three ESs. And I'm like, 3 lots of ES in this environment is not low lots, man. Like, stop talking like that. So yeah, it's just, we're very, all of us coaches, we love what we do, right? We're very, very passionate about trading. We want to see people, Rasi says, zdravo, kako si? Šta ima? And yeah, it's just, it's just so weird to me. It's like somebody tells you, don't do that, do this. And they're like, no, I'm actually going to keep doing that because I think I know better. It's like, cool story, bro. Trading Nichols says, yes, super low dopamine. Trading over in here. Yeah. Is it okay if I accidentally pass my combine in 4 days because swing just went? Yes, it's fine. I mean, I'm guessing Trading Nichols, we've seen you here for so long. Like I've seen you here for quite a long time now. So I would say that you're probably, what was that? Christ, I need some water. Hold on. So I need to, I need to point out that if you are somebody who's been working on your skills for a year, and yes, you happen to pass it in 3, 4, 5 days, there's nothing wrong with it. We have amazing volatility right now. Amazing volatility. Yeah? And it's okay to trade well and pass it in 4 days. That's not the same thing as somebody going, I'm going to go 5 lots on NQ. I'm going to grab 5 ticks, and then that will be my day. And then trying to do that in this environment. Because they're going to have a heavily negative R, unless they're using, like they will never be in a position actually in this environment. Never. So yeah, the risk of ruin of somebody who's trying that versus the risk of ruin of somebody like yourself trading nickels is very different. Yes, you might have passed it in 2, 3, 4 days, but you did it in a sustainable way that can carry over. You're also not going, oh, I'm I'm going to make 1,500 in a day on a 50K. No, you're going, I made 400, 400, 400. Then you probably had an even better day. And now you're basically getting to a point where you passed the combine in 4 days. That's fine. Well done. I'm going to applaud you. I'm going to, send you a gift or something. Like, well done. That is the way to do it. But unsustainable trading practices where you're doing hundreds of trades per day or, dozens of trades per day, oversizing, not controlling your downside. That is where the trouble starts. It's not that we can't pass in 2 days. Yes, we can. I can be super patient. I can pass a combine in 2 days. Why? In 2 trades. Because I decide to go in with 4 lots and I snipe it from a swing trade. I go patiently waiting for days. And I'm like, I'm just going to wait for a perfect setup. I'm going to be super selective. And yes, I'm only going to do 1 trade in a day. But that 1 trade is going to have a profit target of about 184 ticks, which would, on a 4 lot, probably bring you to 4.5 grand, which would be halfway to the target of the 150K account. Have I done that before? Yeah, I've done it before when we were able to trade XFAs and stuff. But, is it a good thing for a new trader to try that? No, because here's what's going to happen. They're going to identify a swing opportunity. It may not work because, we talked about it yesterday with Jerome, random distribution of probabilities. So it's not always going to be like, oh, this one has 77% of working out. Sometimes you're going to find that the, 33% is suddenly going to seemingly look like it's occurring a lot more than 33%. But that's because the random distribution. You don't know which chunk of the distribution curve and the occurrence of that setup you're going to run into, right? This is why you have to stay consistent in a different way without going, well, this always has. So it's not going to be like 7 out of 10 trades always work. No, you can have 3 trades that work, and then for the other time, 7 of them don't work because you run into a period where the 33% happens twice. And then you run into other days when everything seems hunky-dory and everything's super peachy and you just seem to be having an even better than 77% outcome on the setup that you're taking and tracking for the frequency occurrence, okay? This is all just data science, right? And I know that most people are not into numbers and data science and stuff, but, you have to, like, if you want to do this for a living, you have to be on some level interested in numbers. And this is coming from a former session musician who was considered very artistic, and I was considered somebody who is not very good with numbers, okay? But I'm endlessly fascinated by the patterns, by the risk models, and this is why I went into a lot deeper when when I really started getting into trading. I really wanted to find out more about data science, so I learned about that. It's almost like a never-ending opportunity to learn everything. Oh no, everybody's going to bark now. So my dog's going to like DEFCON 1 mode whenever the postman puts anything through the door. Like, stranger danger! It's like, no, stop. Okay, let's have a look at some more questions. G-Wiz says, does CPI affect gold prices like it does? Yes, even worse. So it gets very, very whippy. Be very, very careful with gold and CPI. In fact, most of the releases that affect equities will affect gold as well. Now with copper, that's a little bit different. CPI, yes, it gets affected by CPI. But for example, things like FOMC and stuff, it's just so muted. You know, I was watching it, and then PMI, nothing. Equities, gold going crazy. Copper is like chilling. The release went through several times. I've been watching it now for over a year, right? Like really closely. Because before I kind of traded copper, but I wasn't super interested in it. Oh, I have a flare coming from the sun. I can see that now. I'm not going to do an Andre and go swear. So yeah, I was really surprised that some of the releases, copper is just like, what release? What are we doing? Just literally there was zero effect. And I was like, okay, I suppose PMI not a thing for copper. Cool. And this is where, again, experiential learning, even for me at this point, you know, whenever I start grappling with an instrument that I partially traded, but only like put a few positions in, you have to have that period of adjusting to it and learning its little quirks, right? So I knew that gold as a metal is pretty reactive to everything, right? But copper, a little bit of a different beast, you know, more directional, because gold is directional, but in a different way. Like it kind of whips up and down, like you know. I keep trying to censor myself because, you know, my mouth is a lot more profane when I'm on talking to other traders, but I'm trying to keep it PG, you know, trying to keep it PG. And whenever you see something moving in like big wicks, let's put it that way, it's a little bit hard to find swings that will last. Why? Because it's so wicky. So it's like you're trying to run a swing and it wicks up 70 ticks, wicks down 70 ticks, and you're like, okay, we kind of went up, it's a bullish candle, but Christ, what drama, you know? And then you see something like YM or DAX or, you know, what else is, but copper is pretty smooth, I mean, to be fair. But when you look at the candles on something like YM, outside of the craziness, so we've had a lot of craziness, but generally once it makes up its mind, yes, it wicks a little bit, but it's not like it's a clearly defined steep trend in one direction, right? That's what you want if you're aiming to capture a lot of swings. But let's have a look at gold, and hopefully you will see what I mean. Now, this is 30 minutes. When you're watching this, I mean, look at these candles. Nearly every single one of them has huge wicks to both sides. Like, look at this. Like, what is this? Let's see. Let's measure that. So, you know, I'm very, very selective of what I'm going to trade and when. And that includes knowing how does your product actually behave during a particular release. Now, CPI and PPI, typically across the board, it's going to have an effect. But gold, equities, and copper are probably the most affected by it. Platinum, kind of, but not, again, not so much. It usually has a knee-jerk reaction, and then it just kind of settles into whatever it's going to do anyway. It kind of has its own mind. I tried trading platinum recently. I'm not really sure about it at the moment. It's kind of doing a lot of like, oh, let's go down for, 30 minutes, but then also let's go up for the next 30 minutes. And it's like, just make up your mind. So, whenever I see that, it's okay. But, the time frame of sitting through a drawdown for an hour and a half or 30 minutes, it's very uncomfortable. I want smoothness, and I want that immediate sort of stick away from the entry. Not immediate, but, let's say I entered a trade, waited for a bit, like I did on this copper trade, and it just wasn't happening. It's like, chop, chop, copper, what the hell? And when that starts to break down, like the time that I expect to see something, the move, obviously based on experience and data, versus things not happening. So there's a dissonance between what I know was true last sort of 100 trades that I've done in the same direction, same way, during the same time of day, and then the time starts to not follow that. That is actually a condition where I will consider the trade invalid. So not only do I have the invalidation points for prices, I also have time-based invalidations. So if we're not moving up until a certain time, I'm done, okay? That's been very helpful for myself over the years. When I started putting time into the expectations, even with profits, you know, sometimes I hold the trade until what I refer to as the next day trading time zone. And I don't care whether it's 2R, 3R, 6R, a million R, because that's just the time of day when I hold trades. Like, it's irrelevant how far it goes or whether it doesn't go at all. It's just when I hold trades, right? And to me, it sort of expanded the profits on the days when we are really moving, but it also limited my my losses, because if we're not moving, if it's range bound and the time expires on that trade, I would just close it. Hopefully that makes sense. But let's see how this is moving. So let's go to the measuring tools, price range. So let's see. 30-minute candle, one wick to one side is 72. 72 ticks. 72 bloody ticks. That's crazy. Just the wick. Like, I'm not even talking about the candle. And this one, yeah, about 59.60. So, you know, let's say you're doing 1 micro. Like, how are you even going to position yourself? And this whole candle, oh, lovely, 304 ticks. Obviously an extreme example from all of this, but we've been in this situation for a long time now. This is hard to trade. You know, even if you have it right to say, oh, it's going up, you're going to need like a stop loss of about, like if one candle, if one ATR is ballpark 300 and the others, let's say they average it out around 170, you would need like a 200 tick stop to actually take advantage of it without freaking out. You know, to have the stop loss that can absorb the intraday, intra-candle movements without you freaking out and going, oh my God, oh my God, oh my God, oh my God. No, just to, you know, reduce the sensitivity of that position. Even on 1 micro, you would need to risk like $200. It's a lot. It's a lot. And sure, the upside potential is fabulous, but when that goes wrong, you dig a hole very quickly. So, you know, I'm not surprised why people are a little bit wary of gold. It's like, yeah, not easy. Not easy. There's ways around it. But, you know, anytime you expand stops, you need to lower your risk as well. So lower position size. If you are aiming to reduce the sensitivity of the position to the intraday craziness, madness, craziness. Yeah. Sazy says, I want to hear one of his songs. I didn't release that many songs. There were a few over the years. But I was more, like, when I was getting into trading, I actually did have almost a record deal right before the credit crunch. And we had an investor who was going to put, I think it was like 2 million or something into the project. And unfortunately, when the stock market crashed, so did a lot of the money that they had invested. So sadly, the deal broke through. And after that, I was already 28. And I was kind of a little bit disappointed with the whole music industry at that point as well. And it was getting difficult. And then the credit crunch hit and everything just got even harder. Because over the years, like 2-3 years later, it all trickled down into the session world. So I noticed a big standard had fallen. Like the you know, we used to have nice sort of hosts, and you know, you go somewhere, you're greeted, you have a hotel room, you're greeted like a normal person, right? And then after the credit crunch, like 2 years after that, it's like you're in a van. They got you on some cheap flights that takes you around the world to actually reach a destination. Like you're going to, I don't know, Croatia, and then you have a flight that goes via Turkey. And I'm like, you want me to travel for 7.5 hours, 8 hours to get to, like, from London to Croatia, by the way, it's about 2.5 hours flight, maybe 3. But they had us on like this round, cheapo, Ryanair sort of business. And I'm like, this is just like not fair. And then we arrived there. So it'll give you an idea of why I didn't want to do that job anymore. So we didn't sleep at that point because you don't sleep at night. And of course, cheapo flights leave at ungodly hours. So the flight was leaving at like 3:30 a.m. in the morning, which meant that you had to be at the airport around 1:30, right? And that meant getting out of the house at 11:12. So by the time that we got there was no sleep. I usually used to sleep from about like sort of 4 or 5 a.m. up to like 12, 1, whatever. And, nighttime workers, right? So we got there and we're like, okay, can we go to the hotel? And they said, hotel? And I'm like, well, yeah, because, we're pretty tired. Like we haven't slept. Like at this point, none of us had slept for over 24 hours, right? And they go, no, there's like, we didn't get a hotel for you. You're just like going to do the gig and then you're right back on the plane. And I was like, so you want me to not sleep for 24 hours plus before I do the gig, then I do the gig, and then you want me to not sleep again? And the cheeky effer goes to me, well, you can always sleep on the plane. I was just like shocked. And then another time, another gig, completely unrelated. We were like in Austria doing some sort of I think it was like a Red Bull event or something. So we got hired to do it. And I said, we kind of didn't have lunch. Again, early flights, weirdness, we just didn't have time to sit down and actually eat. And usually back in the old days, you would be provided with a meal. One meal. It's not like you're asking, to be taken to the most expensive restaurant, even though we have done that before. Like when we went to Prague, we went to a beautiful restaurant that was like absolutely amazing food. And that used to be the norm. So suddenly they're like having us on these weird gigs as if I'm like 19 again and angling for any sort of a gig. So they went I said, are you going to provide us with like a meal or like what is going on? And the guy turns around and he goes, well, you've got Burger King across the road. Effing Burger King, really? It's like, and we all kind of just looked at each other and we were like, what is going on with the industry, man? We've just gone completely down. And at that point, I started thinking about making trading into a career, but it wasn't for another, maybe a couple of years after those events that I really decided to just get out. And, every time I talk about it, I talk about music. It kind of reminds me of all of that, if it makes sense. I know it shouldn't, but it does, So to me, music no longer is about, oh yeah, it's beautiful, you enjoy the sensation of performing and stuff. No, it's about all the political nonsense that was going on and how it affected our standard of gigs that we were getting. So yeah, there's a story for you. Trading Nichols says, I feel my success level is a bit anomalous right now. Over 60% win rate with a 2.4R. My last weeks were close to 40 and 1.4. Yeah, so this will happen. You are having a bumper period, right? What does that mean? Well, it means that the market conditions have improved for your style, right? But that is also why over time, like let's say that somebody comes in and only looks at how you've been performing now, okay? I would be thinking, okay, that was smoothed out over time because maintaining a 62% win rate with a 2.12 profit factor, that's smashing it. You're smashing it, absolutely smashing it. Anything over 35% and 2R, you're one of the richest people in the world, right? 60%, you're the next Paul Tudor Jones if you can maintain that. And here we get into time. Normally that smooths out. So you're not going to always have the weeks. So you're completely right. You're overperforming. That's great. It's amazing. Reap the rewards of this period. But it does show that some people will only take that period and go, I'm the wizard. Let's open up a hedge fund. And it's like, you've been trading for 1 month. It's like, yes, it's good results. Let's keep that up for a year. Maybe we've got something. And then a year gets through and it's like blown combines, blown accounts, blown everything, a complete car crash. It's like, what happened to that 1 month where everybody was... Now, I'm not saying that about you, Trading Nichols. I know I've seen you in here so much. You're working very hard on your skills. You are always here asking questions and really, really good questions as well. So I would just say to anyone who is in an overperformance period to stay realistic. Don't be afraid of it. It's great. That's what we are here for, right? We are traders. You will have bumper months. I have bumper months. I have months where I literally just double or triple the account balance just like that. And it doesn't even feel like work. And it's because the market conditions are very conducive to my strategy. So there are other months where I'm struggling and I'm like, this feels a little bit like pulling teeth. Like I'm sort of scratched, then I'm a little bit of drawdown, then I'm a little bit of profit, then I'm back to scratch. It's like, Christ, man. But this is where all of that mixed together smooths your equity curve, smooths out your accuracy, your profit factor over time. So that's the number that you need to base your systems on, not the ones where we are overperforming. I actually base my risk models on the underperformance. So whenever I really suck, I want to see how much can I suck but still stay in profit. So that's why I maintain a higher risk reward, so that even when I start going down to 35%, 32%, I look to improve it, but there are just times of the year where you can't avoid it. It's just, quieter, or I'm not reading the market well, there's something going on in my life. We're all human, we're not robots. Things will happen. But once you put all of that in the mix and you kind of stir the pot and then you serve it up, what do you come up with? What sort of numbers do you have there? They're not going to be the best numbers, they're not going to be the worst numbers. They're going to be ballpark average of your underperformance and overperformance. That's why it's important to keep track of your journaling, right? So you need to put all of that in, run it for a year, see what, I'm sorry to say, it's people expect everything tomorrow these days, especially the much younger generations. I've noticed this with my nieces, I noticed it with other people's kids who are also around about the same age, sort of from 20 to 27. They kind of they want to skip past the times when there's learning and development. They want to skip from not knowing anything to being a neurosurgeon tomorrow, right? And just like that, they want to go from not knowing anything about the market, just clicking a few buttons and being multimillionaires with a Lambo. It ain't happening that way. It's a progression, and it's not a linear progression either. You're going to have ups, you're going to have downs. And then they get really discouraged. It's like, oh, boo-hoo, I'm not a millionaire yet. I started trading 2 days ago. It's yeah, imagine that. So yeah, patience, gathering data over significant periods of time will provide you with clues whether something needs to be worked on. Now, Trading Nichols, it sounds like you're doing amazing, but it also sounds like you know your stats when this is not happening. So then you're very rightly asking yourself, am I due for an underperformance? Maybe once the volatility is not there, maybe. But at the moment, you're thriving in this volatility. Enjoy it, okay? Jiwa says, I bought gold last night in 30.97. I added it now long micros. Okay, when you're adding gold ahead of CPI, I would be taking things away. I wouldn't be adding it 2 hours before the CPI. But that's me. So yeah, just going to say that. Be very careful. Jay Nichols says, should open up a hedge fund. Yeah, I was thinking that 4 to 5 years ago. Yeah, I think everybody goes through that a little bit. Now, in the beginning of my career, probably within the first 6 years, I actually did go to try. I thought I wanted to work for a hedge fund. I don't know whether I lasted a month. I did not like from the dress code to the early, early start, crazy early start, like crazy. Then to, the frat culture, frat boy culture that's also in some hedge funds, unfortunately. Which I don't mind. Somehow I don't mind it in prop because we're all like really relaxed and stuff. But you see these like people walking around in like suits and power dressing and everything, and then they just behave like 12-year-old boys, and I'm just like, it's pathetic, So I didn't like that, and then I felt like most of the time it wasn't about you sitting down to trade. Most of the time it was like, let's generate a report for this investor. Let's go talk to this investor. Let's have a meeting. Let's have another meeting. It's like, when do we get to trade? So maybe that was my unrealistic expectation of what that job should be like. But I didn't like it, so I went to prop. Went back to being a cowgirl trader D over here. A-list party music says, thanks for the information. The current market conditions are killing my account. Let's talk about it. A-list party music. Did you size down? Did you slow down? Momo says perception versus perspective. Yes, absolutely. So yeah, Nanka is asking me whether I ever thought about doing stand-up. No, I think I had enough performance careers for now. One is I grew up with a comedian dad. That's where my humor comes from, because he was almost like expecting us to riff off of his jokes and stuff, especially me. I was like the second child, and I was born like underweight and slightly premature and whatever, so they were like really quite careful and doting and whatever. But when I was growing up, my dad was trying to my dad was like a very funny guy, right? Very, very funny guy. But he was a little bit strange, because sometimes he would try and do like slapstick comedy on us, and it got weird. One time I ended up with an egg in my hair, so I was like, what gives that? He's like, it's just a bit of egg. It's good for your hair, And I'm like, this is abuse. But, it was all just joking and stuff. But it did get a little bit nuts at times. And he expected us to take part in the jokes and the comedy. And, so that's where that comes from. And I've always kept that as my humor. Now, granted, when I started my YouTube channel, I was like deer in the headlights, right? I didn't like talking to a camera. I was like, ugh. Now, obviously, I've got you guys. I've been doing this for a very long time. I worked on my presenting skills as well. So, yeah, now you can't bloody shut me up. But back then, I was like, hello, traders. Big purple hair, Hello, traders. We're going to be talking about supply and demand today. Like, really, really weird accent, because I just come back from Chicago as well. We're going to be talking about supply and demand. But yeah, so never thought about doing stand-up, but I kind of maintain a humorous part on my YouTube channel. Whenever I make a new video, I try to make it funny. I try to do like funny memes and crack jokes and, make fun of the prop firm rule changes and the shorts and stuff. And traders, writing their trading plans and then putting the journal upside down and, being a bit muppety. So I quite like doing that sort of stuff, but no, I don't think I would ever kind of stand up and crack jokes on stage. Eddie did. Eddie was a stand-up comedian. I don't know whether you guys know that. He did that. It's a very brave thing to do. Like, I'm not sure that, I would be brave enough to do it. That's like a step outside of my comfort zone, I think. Okay, yes, now I'm trading micros, A-list party music says. Okay, how do you trade A-list party music? Do you trade a lot, or do you trade, 2 to 3 trades a day? What is your style? Because that's going to give me an idea of how, oh God, M&Q. And how long have you been trading A-list party music? Now, if you've been here for a while, you know what I'm going to say if this person says less than 5 years. Let's see. Let's see. Very interested to know. Matteo, in the meantime, while we wait for A-List to answer about the years or time they've had in the market. Matteo says, which strategy would you recommend beginners start with and try to master first? What are the basic steps you'd suggest? I would say study things like Wyckoff, supply and demand, and then once you spend a little bit of time on that, go into the auction theory and market profile. Those are the two most helpful, somewhat simplistic, although profile is not that simple, but it's very logical. So logical things about market structure and to start to understand the mechanistic nature of the markets, right? Three trades per day. I have been trading for 7 years, but futures 2 years. Okay, that's great. That's great. That means you're not over trading. You have a lot of experience. No problem. All right. So yeah, just size down and maybe review your stop losses, because these stop losses that I'm seeing being necessary to actually run any meaningful trades, they've expanded to like 3-4 times now. But that also means that you can probably expand your targets as well, right? So it's all just, give and take. Any direct links to auction theory? Well, Testino, I do have the entire YouTube channel. You have Dalton that has been here forever. If you want direct links to anything, just you're going to have to look at the respective websites for Dalton, for myself, for his things, my courses, other people's courses. There's a few people doing market profile now, but I kind of feel, we've all learned from Dalton. So even when people come to me, yes, I do talk a lot about the market profile in level 2, but I kind of feel like it would be easier for me to explain things and why I'm structuring it that way if they've already been with Dalton for a while. So, but if you don't know anything about it, you can just come to, let's say, the Market Stalkers method, and, I will teach you everything from scratch. But then I go into why I'm not teaching certain parts of it and why that's a little bit different, changing market conditions. And then lo and behold, Dalton actually came up with a new book where he actually made a lot of the same changes that I talked about back in 2017, 2018 when I was creating my links. So yeah, you can look at some of the content that I've done on market profile as an updated version of it. That's the way I look at it, evolved view of market profile in light of COVID, in light of changing market conditions, what still works, what still doesn't work. You can always start just on YouTube. My link is down below this video, and then just take it from there. See whether you connect with any of it, and then dig to find more. And all of the links will always be below the videos. So whoever you're watching, even Dalton, I think he's got like YouTube stuff going. There will be always links to his stuff. So, that little show more area, the description box below every single video, I think YouTube have kind of made it less obvious on some devices. But, there's a lot of interesting stuff usually in there, so do check it out. Do I trade NASDAQ? I don't really trade NASDAQ very often. I trade DAX and YM out of the equities. Probably DAX is one of the main products that I would say I'm very familiar with. YM reminds me of it, and I do watch it a lot, but I haven't had like thousands of trades in it to kind of fall back on the sample size. But every time I seem to find a trade in YM, it just kind of works. So this is why, but I don't do it often. I will maybe plop in a YM trade every 2 months or so. I will see something and I'm like, oh, that looks good. Click. So yeah. CZ says every field in life, like making music, for example, seems to have a background noise, political and BS that dilutes having a future in the field, boils down to trading with its downside still being better. Yeah. How can you tell whether you're trading whether you're over trading? Yeah. Okay, so let's talk about, just to end this session today, let's talk about system design for a second. Somebody who has, let's say, a profit factor, which means the average risk reward on your trades. Let's say that it's 1.3, right? Let's make it easy, actually. Let's say that it's 2R, like trading nickels here. And let's say that they do one trade that works, full target, 2R. The next trade doesn't work. So now they're sitting at 1R, net profit on the day, right? What happens if you trade again for the third time and it doesn't work? Because we always want to go from the worst case scenario, not from the best case scenario, right? What happens then? You're back to scratch. So you've done 3 trades, 1 went full target, the other 2 didn't quite work out. Is that sensible to you? You've made money on the first trade. Why the hell are you trading for the other 2? Because I want more. I want more. We want more money. And then you end up with nothing. That's overtrading, right? If your system, like that's the extreme example of somebody who has a positive risk reward but keeps trading past that point. If you are somebody who's more scalpy, let's say that you have, 1-to-1 risk reward and you maintain the profit accuracy or general accuracy of 70% ballpark, right? And now you hit the time of day when you're a bit mentally exhausted. So you're like, okay, it's been a very long day. I've done 25 trades, but I want to trade more. So they're sitting on some nice bit of profit. Their accuracy at that point of the day is still over 70%, but now they're a bit tired, so they start clicking buttons. Suddenly their accuracy falls down below the break-even point of 56%, because they need to maintain accuracy of over 56% across all trades at all times in order for that to be right. Or they need to outperform. They need to have days when they're outperforming 85%, very high accuracy, and then they're underperforming. But as soon as you start dipping your averages below the break-even points of those systems, 2 very different systems, by the way, both work, but you need to know the break-even points. So at what point are you overtrading? Well, the second guy is overtrading once he's done so many trades that his accuracy starts to dip, and the first guy is overtrading because he's allowed to go past a number of trades that went past his average risk reward. Because it's like 2 different sides of the story, right? So to me, it's always easier to deal with people who are on the first side, the first dude, than the second guy, because I have no idea what they're doing in the millions of trades. I had somebody who signed up for my payout incubator program, and which I'm not running at the moment. And he was actually on the London stream, and he goes, Dee, if somebody is doing 300 trades, how would you review that? Like, how do I journal that? And I was like, if you're the same person and I knew it was. So I said, you're doing 300 trades a day? I'll refund your money right now. I'm not dealing with that. If you think I'm going to be reviewing 300 trades per day from one person, and there's no way to efficiently journal. The only way to do that is just to have either the trade analytics or get Edgewonk or, TradeZella or something. Put it all in there and then just see whether you can somehow sift through the data. But even then, it's not going to be particularly easy because you can't just go, oh, where did I go wrong? Because a lot of the newer scalpers, they lose the plot, then they come back up and then they're doing well, then they lose the plot. You have to have more consistency than that if that's just trading style. So even scalping needs to be more methodical. I know there's some intuitive traders out there, oh, it's breaking out, let's go. But it's not quite... it's not quite that simple. I wish it was. Otherwise, you get a lot of ups and downs and ups and downs. Yeah, dopamine junkies. Yeah, there's Jerome. Yeah. All right, guys, I'm going to finish it here on this note of system design. Let's have a look at what CPI brings us in about I think it's an hour and a half? 2 hours. About 2 hours or so. And let me throw some links for you. So here is the Topstep Discord. If you are looking to get a trading buddy, you want to come attend our VIP classes with Coach Hoop, Coach Paul, Coach Ray. We have so much stuff going on. Check that out. And also if you want to come hang with us, get to meet everybody, say hi, you know, ask some questions, do some trading, fill out the casting call form. There it is. That's it for today. Thank you so much for hanging with me. This has been the Euro Trade with myself, Market Stalker D. I will see you later on the main broadcast for one of the rotating segments. Until then, take care.